Welcome back. Big data doesn't come much bigger than S&P Global. From ratings to indices, market analysis, it's been a leading player in the space for decades. Now it's even bigger. As for giant mergers, there aren't too many more notable than its $140 billion tie-up with IHS Markit. That deal completed early last year. Yahoo Finance's Julie Hyman caught up with the group's CEO and president, Doug Peterson. She asked about the integration of the companies and the general tone of the World Economic Forum.
We do see a slowdown in the EU and the UK and the US could be dipping into a mild recession, recovery later this year. We don't quite know the timing, but how do you prepare? It depends a little bit on your industry and your business. What I'm finding a consensus here, a lot of companies that I've been meeting with are slowing down their investments and their hiring in the first quarter. They want to see what the conditions are going to be like, what kind of growth we're going to have. And so we see a few that are doing layoffs and really lowering their cost base, but most are just cautiously slowing down.
Gotcha. You've been coming to Davos for a long time with a few breaks here and there, and you know that the global perception of this meeting is not entirely positive, safe to say. As someone who's come here for a long time, what would you say to that, and how has the meeting changed as you've been coming?
Well, first of all, one of the benefits is that you get the entire globe here. You get academics, you get people from research areas, you get business, financial services, you get government. So you get the whole aspects of the economy here, and you can have really open dialogues. I'm finding that we're talking a lot here about sustainability, about energy transition, about economic growth. And so these are the themes that have been consistent throughout. Maybe this point about sustainability wasn't something we were talking about 10 or 11 years ago. Then we were talking about the financial crisis, post-financial crisis recovery. So maybe we've kind of evolved away from that into some new topics, but it's always been about the global economic.
Right. And what about the idea of how people get here when we talk about sustainability, right? How do you think about that?
Well, you mean
in terms of flying in?
Oh, flying in. Well, everybody is obviously looking at their own footprints, their environmental footprints for their company or for their organization. I actually have heard some people that flew in this year commercially instead of privately. I fly commercially when I'm flying internationally, and it's something that people are very conscious of now and becoming much more so.
Right, because they know a lot of attention is on it. I want to talk about your company a little bit, because we haven't talked in a while. You were busy digesting a big acquisition of IHS Markit, $48 billion acquisition, and it's changed the company, right? I was looking at the revenue breakdown, actually, and how it sort of shifted, now weighted more towards market intelligence, weighted less towards the rating business, although obviously that's still important. What do you want to communicate to people about the new S&P?
Well, the new S&P has a strategy, we call it Powering Global Markets. And we have all of these different divisions that are providing independent, transparent information, data, benchmarks, indices that allow investors to make informed decisions. And what we have now with the two companies coming together is much deeper information, much deeper data. We're able to invest in technology, machine learning, artificial intelligence in a way that's at scale. And you are using us already. I know you are. You might not know it.
Yes, we definitely are.
But everyone is using our data to make decisions and to understand what's happening in the markets. And for us, it's really exciting to have all of these new capabilities. And you didn't mention commodity insights. We now have a very large position in information and data about commodities. And this goes, right now it's very relevant what's happening in the world with energy, with agriculture. And so we have all of these different markets covered: debt, equity, commodities.
Let's talk about commodities for a second. And I know you're not, deeply steeped in the day-to-day data crunching on that, but that's been one of the topics of conversation that we have had with people here, especially because obviously inflation is top of mind. We've talked to some folks who say we're going to see a big reacceleration in commodity prices this year. Is that what you're seeing?
Well, it's possible, and probably driven by China. We know that China was in a zero COVID environment for the last few years, which meant that there wasn't a lot of consumption. And that creates two, let's call them opportunities. One is that there is a lot of pent-up capital which could be going into the investment world. They believe there's about $2 trillion of new savings in China that could go out to the markets for investing. And then as consumption increases, there could be increased demand for soybeans and iron ore and the pull of commodities around the world, and that could increase prices.
Speaking of China, Vice Premier Liu He was here, which was a bit of a surprise. Do you think that it's positive that he was here? Do you think that it sounds like you don't think Chinese growth will slow to the extent that it will maybe harm the rest of the globe. What do you think?
It was down to about 3%. It should increase up to 4.8 or so this year, could be even be higher. I think that having the Chinese here was very positive. If you remember the last few years, there hasn't been a lot of face-to-face dialogue, probably on Zoom calls and things like that, but getting the Chinese engaged, having the dialogue again, some of the words that were used were very positive. They talked about engaging with the world. We're seeing that there's obviously an understanding that China is very engaged and involved in the global supply chain, and their largest customers are here in Europe and in the U.S., and I was very, very, very optimistic having them here.
That's great. And finally, to circle back around to the acquisition for a second, because it's almost a year now. I believe it was late February when you closed the acquisition last year. And you've done some sort of divestitures and tinkering around the edges. Is it pretty much done now, the integration? And are there any other sort of deals around the margins that you're going to be doing in the coming years? Or you're taking a little rest?
This is our priority.
Right.
When you do a merger like this, it's so large, you have to make sure you get it right. And we started very quickly out of the box as soon as we announced the merger, even before we closed. We had an organization design in place, we had a strategy in place, and very importantly, values. We wanted to start with the kind of culture we wanted, and that's gone incredibly well. And then we could move quickly on what it had to do with our customers, with commercial operations. We're ahead of our synergies, both on the cost side and on the revenue side. And encouragingly, our customers are very interested and excited about what we're doing because we can bring data together in new ways that they can use. We're ahead of our sales synergies, so we're very pleased with this. But this is right now our focus. We're very interested in commodities and indices and fixed income markets. So it doesn't mean we're never going to do acquisitions again, but right now our main focus is getting this done right.
And just very quickly, are you seeing any kind of slowdown in demand from your clients as we see this economic slowdown?
Well, we did see that there were almost no M&A acquisitions deals last year, which meant that we didn't see a lot of volume for some of our ratings areas, for some of the data products that we have that rely on IPOs. So we did see some slowdown, but our basic subscription businesses were motoring along quite well. And there's a lot of interest in what we do in a market like this because we're a voice that's gathering information from all over the globe, from all different sectors and industries. We have risk businesses. People want to know what are the risks. They want to know what the trends are, what the forecasts are. So sometimes in a tough market, people actually come to us even more.
That was S&P Global CEO and President Doug Peterson alongside Yahoo Finance's Julie Hyman at the World Economic Forum in Davos. More from our team later on.